Time. We're talking EV price wars and talking with Tim Higgins. He is the technology reporter for the Wall Street Journal and the author of the book Power Play, Tesla, Elon Musk, and the Bet of the Century. A little bit of a power play yourself just then, my friend. It's nice to see you.
Good morning. Nice to see you.
We were talking about the sort of valuations of these companies, but what I was going to ask you is, you know, you've been covering Tesla for a very, very long time. And there's two ways to think about the valuation of the company. One is as a car company, and one is as a car company plus, or something else entirely. And I'm curious where you land these days.
Yeah, you're right. You know, I think the market would like to value it as a tech company, betting on the idea that it's going to be more than just a car. It's going to be an autonomous robot taxi service. It's going to be an energy company. And the market's really been struggling in the last few weeks as you've seen kind of the realities of moving metal in the storerooms. It's messy and it can be kind of expensive. And so I think in the last few weeks, you've seen some of that kind of excitement return to the idea that it's a tech company, but it's still a long road for the rest of the year. Heading into a potential recession could really test that thesis, I believe.
And where do you land when it comes to the pricing issue? I mean, the good news was they lowered prices, seems to be moving vehicles. The question is, at some point, from a pricing perspective, can everybody else do that? Maybe they can't do that.
Well, in a lot of ways, it's a classic automotive sector move. You know, the issue here is that Tesla has so much margin that it can afford to do this. And investors traditionally here have been willing to see margins decrease, that pressure, and with the kind of seeing the growth in sales, they'd rather see market share gains or keeping that market share strong because Tesla is a growth story. Now, other automakers don't necessarily have that ability, and they're really in a bind as they try to come to this new technology into the marketplace. And they've been betting that the pricing would be what it was going to be, and now, you know, they're facing new pressures from Tesla.
I don't know if we can put a screen back up of the EV makers, because what we do, it's a very interesting thing. We show Tesla and we show it up against Rivian, Lordstown Motors, NIO, and Lucid Group. We don't show it against Ford or General Motors or the like. I don't know if that's, you think, the right way to look at this or the wrong way to look at it. I was curious how you're thinking these days about a Rivian, how you're thinking about these days about a Lucid, for example.
Yeah, I kind of think of them in the same ways that I thought about Tesla 2008, 2009. It's a real critical period. You know, cash is going to be king for these smaller players. Can they get through a downward cycle? That's going to be the big gamble. You know, people who look at the product that Rivian is doing have a lot of praise for it. They have a lot of praise for what Lucid is doing. The bigger question is, can they make it as a real car company? And if you look at Tesla as an example, that can be a very painful process from going from the rather cool idea of a car, cool product, to making a car at scale. Just ask Elon Musk and his sleeping on the factory floor for all those years. It's messy.